Wow, ladies and gentlemen, what a day for Rezolve AI. My fellow Rezolvians, welcome back to the channel. We have a lot to discuss in today's episode. Just look at the chart, okay? Look at that. Support on the 200-day moving average. To a T, the low of the day today, $3.08. 200-day moving average, $3.08. Look at that. Resistance at the 20-day moving average, $3.74. The high of the day today, $3.73. It's incredible. Now, Rezolve was up over 20% at one point today. You really have to understand this. Today began an end-of-the-year rally. Confirmation has confirmationed, okay? Something very particular happened in the broader markets today that caused this intraday volatility. I'm going to discuss that. I'm going to put it out there for you in simplest terms possible. But what you're about to see with Rezolve is exciting. Now, we're going to go over the option activity, what the short sellers did today, my position in Rezolve, any and all news today, the charts and all of that. But if there's one thing you walk away with, it is Rezolve is about to morph into a stock that some of you guys have hoped it would be for a while now. Okay? You're about to see some pretty dramatic upside, in my opinion. Now, before we get into all of this information, critical Rezolve update, hit that like button, subscribe to the channel, helps push these videos out to more people. And at this stage, more people get exposed to Rezolve, the more people we can ultimately benefit. Assuming we're correct, assuming the company isn't a fraud or something. I'm not a financial advisor, I'm not a financial planner. There's always a possibility some crazy shit happens, but assuming the company is legit, I think there's massive upside from here. Now, if you guys want to come trade and invest with us, Rezolve is not the only stock that we own. There's a lot of other opportunities as well in this market. If you want to come find similar stocks like Rezolve, where I believe limited downside risk, a lot of upside potential, check that link out down below. Again, not a financial advisor, so make sure you verify everything said in videos, you come to your own conclusions, and do your own due diligence. But that link is down below if you guys want to come join us. So first and foremost, we're going to talk about what happened in the broader markets today, because that's what you really need to understand. That is the limiting factor of Rezolve right now. Now, we're going to talk about it in this video. Rezolve is going to have a series of catalysts coming very soon that is going to cause the exponential upside. But as we talked about in the prior video, Citadel came out today and said that they expect about a 6.5% rally in the S&P into year end. They think the S&P is going to hit 7,000 or roughly 700 on the SPY. Some people, I would imagine, a lot of people are confused what happened today. Let me just give it to you in short form. What happened today is actually very simple. Well, over the past 2 days, we had NVIDIA earnings, blowout earnings, AI alive and well. That was last night. Great. So we were entering the day on a strong note. Awesome. Best case scenario. We had Walmart earnings this morning where Walmart said they're optimistic about the holiday shopping season. They said, quote, "We have not seen a change in consumer spending behaviors." That means the economy couldn't have changed all too much. Back in 2007, Walmart, they cut their full year guidance. They said the consumer's slowing down. They said things are getting rough out there. The exact opposite of that was said this morning. So, economy stronger than expected. We got economic data today. The jobs report for August, okay, was 22,000 positive jobs. It was revised to negative 4,000 jobs, so that's not great. But the September jobs report we got this morning came in at 114,000 job ads, 115,000 job ads. the expectation was 50,000. We talked about this in prior videos. Anything higher than 50,000 was seen as negative. Preferably, you wanted like 20 to 30,000 positive jobs. That would have been strong enough where you don't stoke recession concerns, but weak enough where the Fed would be prompted to cut rates, okay? That was the best possible short-term outcome. Well, we got a jobs report that was over double the expected jobs gain, okay? That is a good thing. Like, don't get me wrong. That's a great thing for this economy and for this market. But on a very short-term basis, it does mean you have to unprice that December 10th rate cut. Okay, that's just what it means. Now, we were expecting to get GDP, personal spending, and some smaller data sets next Wednesday on November 26th. The BLS came out today and said we're not going to be getting that data. So we don't have any other data between now and December 10th that is going to move the needle to give us a rate cut. So what happened today is Wall Street said, oh crap, no rate cut. Capitulate. Let's sell this market, sell the news. Okay? But if you didn't know, not getting a rate cut does not matter. We haven't been pricing in a rate cut for 2 or 3 days now. It's just the final, pricing in of no rate cut that caused a little bit of capitulation, okay? But ultimately, Nvidia earnings were good, Walmart earnings are good, economy's good, jobs report was good. The last CPI report we had was good, but we're not going to get one of those for a couple of weeks. Things look, dare I say, great, out there, right? Could they be better? Of course. But you're not going into a recession, which was partially the whole reason why small cap AI was selling off to begin with. This, my friends, is a final shakeout. The pieces of the puzzle are now put in place for a year-end rally, for an aggressive rally in this market. That's why Citadel came out and said the S&P is going to rally 6.5% in the next 5 weeks, 5.5 weeks, okay? I'm also going to tell you, in my opinion, we're about to rally. The S&P is down now over 5% from all-time highs. The NASDAQ is down over 7% from all-time highs. And the Russell is down 8.5% from all-time highs. Let me give you something you can walk away from this video and forever remember, okay? Here it is. Markets go through corrections because of recession fears. Markets go through crashes because of recessions. Unfortunately for the bears, not getting a rate cut is not a crash catalyst. It is a near-term 1 to 2 day that sucks kind of a thing. But you have to weigh the positives and negatives, right? Walmart earnings were good. Nvidia earnings were good. Economy looks good versus no rate cut. What do you think's going to win there? Okay. Now, as we talked about in the prior video, pretty straightforward. The market sentiment is complete shit. Okay. CNN Fear and Greed Index, just to point you this one, is at 10. It was at 8 at one point today. It's at 10. Okay. You're about as low as you could get. AI Investor Sentiment Survey is complete shit. Percent of stocks trading above their 50-day moving average, 31.5%. Complete dog shit. Okay? Just because you're not going to get 125 basis point rate cut doesn't matter. Okay? This is a flush out event before a larger rally to the upside. Okay? Now, let's talk Rezolve. Rezolve today, while there was no company-specific news, was a real outperformer. We've seen some very strange things happening recently, in a good way. Like the short interest was recently, in early October, 11+%. Today, it's 4.34%. Short sellers have been covering on short positions in a big way, and we'll discuss why that is in just a moment. There was a little bit of shorting pressure on the stock today, about 916,000 shares estimated to have been sold short today. And the option activity, there's no option activity from hedge funds and institutions. But over the past 2 days, you've had two interesting trades targeting anywhere from $3.30 to $5.30 per share. So upside from here between January and February of 2026. Okay. So you've seen some weird things happening under the surface. I'm not surprised that Rezolve is outperforming. Now, it's not just Rezolve. A lot of the stocks that were beat down the most are rising the most today. But even out of those, Rezolve is really a standout. Look at BBAI, down 2%. Poet is up 2.5%. Soundhound's up 2.5%. Then you have Rezolve up 6%. Rezolve is outperforming relative to its peers again today. Now, on a technical basis, you found support right at the 200-day moving average. That's great. You want to continue to find support there. I don't think this leads into a larger market crash just because we're not getting 125 basis point rate cut that wasn't going to do much in the first place. Okay? The other positives far outweigh that slight negative. Okay? So I think you are going to find support at that level. But there is a lot of room to the upside at this point. The RSI is at 36. We touched the 20-day moving average today. Once you get above that 20-day moving average, then you make the move to about $4.16 per share. That is the 100-day moving average. Beyond that, things get pretty crazy because then you even break out of the downward kind of trend or channel that we have found ourselves in, right? Look at this. Pretty clear, downward channel that we have been in for a while that you actually broke out of today briefly. And we'll see what happens in after hours trading. If we can ultimately close above like $3.30 or so, then you actually break out of this channel completely. Then you, again, are targeting some pretty hefty upside levels, okay? Which I think is ultimately going to happen. Now, Rezolve is about to have some big catalysts coming, okay? And I believe this is why the short sellers have been covering on their short positions to begin with. First and foremost, Dan Wagner on X responded to a comment on his recent post from Blueberry Coconuts that says, "If you make her rich, she will forgive you. If you make me rich, I will forgive you too. Announce the deals, report quarterly, update current ARR. Simple." Dan Wagner said, "Yes, sir." That sounds like he's agreeing to announce the deals, report quarterly, and update current ARR. Then he said on the same post to Carlos Moda on X, he says, "Dan, my family office has a significant amount invested in Rezolve. I like the vision, but we need an update versus ARR 2025 targets. When can you give us some flash report?" Dan Wagner said December. Let me tell it to you like this. Rezolve doesn't report or doesn't legally have to report until March. There is a 0% chance in my mind that Rezolve would come out early and share 2025 ARR if they were going to miss targets, right? If Rezolve was going to miss their 150 million ARR guidance, they would wait till March to tell you that. The fact that Dan Wagner says we're going to get an update in December, some people have thrown out December 3rd. I don't know when exactly it's going to be. Early Christmas present, maybe. We'll see. Only is suggestive of one thing. Rezolve's going to beat their 2025 target and give us a good number. Hopefully it's like 200 million, 200 plus million. We'll see. I don't know what the actual number is going to be, but that is a big catalyst coming. If Dan Wagner and Rezolve do share any of the contracts that they have entered into, that is big news. And if Rezolve starts to report on a quarterly basis, that is big news. So I think there's really three big catalysts that are coming. Two of them are pretty for certain, in my opinion. Rezolve is going to start reporting on a quarterly basis. They're probably going to tell us that, in December. That wouldn't surprise me. And then Rezolve is going to come out and beat their 2025 ARR guidance. By what margin, how much, I don't know. But that's why I would imagine short sellers have been, exiting their short positions. Now, back to what's happening today. Do you think I give an F what's happening today, the fact that, markets went up because they logically should have on good news, good economy, good NVIDIA earnings, good, economic data across the board, and then sold off because we're not going to get a rate cut December 10th. Do you think that really matters? Come on, let's not act brand new here. This means nothing, okay? Now, Rezolve still outperformed, still had a good day today. That's great. But I do think the markets are going to recover from this, panicked moment in very short order, okay? This is not a crash catalyst. If anyone's in the comment section of this video saying, "Oh my gosh, the markets are going to crash," like they're brand new. Okay, they're brand new to this. Just let them experience, let them have that experience of, going short the markets, buying some puts at precisely the wrong time. Uncertainty has been alleviated following today. This is a knee-jerk reaction, aka a shakeout. That's it. That's all it is. That's all it is. So I'm not concerned whatsoever. Now, again, we did not have any specific news for Rezolve. So we're going to skip past that, and I'm going to share my position with you as well, just in case you're, again, wondering. But I think we're in store for some pretty significant upside for Rezolve over the next couple of weeks, okay? Whether, it's the upcoming catalysts that are clear to see, right? Again, let me put this in English, just so we're all familiar with this. Rezolve would not come out and voluntarily miss numbers early. No company in the history of ever would do that unless it was really bad. Companies do not pre-report a really bad number unless it's like really bad, okay, or for very strategic reasons. Rezolve is not going to come out in December and give you 130 million in ARR this year, right? They're just not going to do that. They would wait until March. I think we know Rezolve better than that. So they're going to come out. They're going to give us some really good news in December. They're probably going to announce they're going to start reporting on a quarterly basis. That March is going to be the first quarterly report, and then we'll get quarterly reports after that. That is also good news. We'll see if we get contract PRs. But even then, when I look at the broader markets, the pieces of the puzzle are there for a pretty aggressive year-end rally. You don't need the Fed to cut rates, okay? And if the Fed don't cut rates in December, the odds are very good that they cut rates in January at their next Fed meeting, okay? So for Rezolve, once you really get above that 20-day moving average, then you could see some pretty quick upside to that $4.16 range. But after that, I mean, you could be in for $6 to $8 per share in relatively short order. Rezolve comes out, tells you they hit 200 million for 2025 ARR. I could see Rezolve doubling from where it is today pretty quickly. Again, I'm not a financial advisor, I'm not a financial planner, but that would be my thought and my expectation. Okay, there's plenty of room for this market to get some strength going, and I think that's what's going to happen. And there's plenty of room for Rezolve to get some strength, and just mix that with some of the weird things like shorts covering, abruptly as abruptly as they have, is suggestive that someone out there knows something. Okay, someone out there does not want to be short in Rezolve anymore. Now, as far as one of my positions here, current market value $45,243. Currently up 6.2%, or up about $2,600. Average cost $2.99. 14,250 shares. Okay. In this portfolio, we have 11,305 shares. Average cost basis $2.89. Currently up 9.82%, or up $3,200. Current market value $36,000. So let's add this together. We have 27,855 shares, including 1,000 shares in Webull and 1,300 shares in Thinkorswim. Times that by the current price of Rezolve, $3.18. You're looking at $88,578 in total exposure. I think this is a 10-bagger. I think this position turns into over $1 million in the next 12 to 24 months. Okay? It's my opinion. Could I be wrong on that? Of course. But I think Wall Street is really just not paying attention to this one. And the signs are there. You should not sleep on Rezolve. So let me know your thoughts on this down below in the comment section. Hit the like button. Subscribe to the channel. Again, are you bullish? Are you bearish? Did you like what you seen today? Did you not like what you seen today? What do you think happened in the broader markets? Do you think this is a shakeout like I do? Do you think, are you brand new here? Do you think this is the start of a larger crash? Okay. Let us know if you're brand new. Like don't just let us know. Okay. The bears are brand new here. Okay. Just because you don't get a rate cut doesn't cause a market crash. Never does and never will. Okay. Not with a strong economy, AI alive and well, and the recent catalyst we've had. So check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, have a great rest of your day, and I will see you in the next one.